All right, good morning, everyone. It is 9:05 on the morning of September 27th, 2022, and this is my pre-market strategy session. And so I am sticking almost strictly to the cues for trading, and that's to the bearish side of things. And so what I'm looking at today here is the title of the video is my recency bias. And so what we kind of have here is this somewhat of a stair-stepping down formation. Here steps down, here steps down. And I imagine that something similar, although probably not as dramatic, will occur in the not too distant future. Let's see, in fact, actually also, let's see, in the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading days, we've seen top to bottom of 12.46%, right? And so nothing moves, the markets don't move in straight lines. It just, it very, very rarely happens. It does happen on occasion, but for very short periods of time. And so really, my recency bias here is that we're going to get similar to these support and resistance zones up here from back here on the 26th of July, and then dip down below and then tried to come back up and hit it and failed miserably. And we're going to see something similar happening here with this 280 level that we saw happen in these 3 days here. Let's see, this is 16th of September, 19th, and 20th. So it's a Friday, Monday, and Tuesday. And my best guess for right now is for today and the next couple of days, this region right in here is going to be our main region of activity. I will be looking to enter shorts as we get close to the top here at 280. And I want that to coincide with my 1 minute and 10 minute oversold and overbought conditions at the same time, simultaneously with the VIX on the 1 minute and 10 minute being the opposite. So in the Qs, I'm looking for overbought conditions, for it to come out of overbought conditions on the 1 minute and the 10 minute. You can see here on the 1 minute, it's coming out of oversold, and on the 10 minutes coming out of overbought. So I want those to be coincident. I want those to be coming out of overbought at the same time that the VIX is coming out of oversold. And if that happens right around, so there are 3 coincidences I'm looking for. I'm looking for the VIX to start coming out of oversold. At the same time, the Qs are coming out of overbought. And the closer it is to this 280 mark right here, the more confidence I'll have in the setup. So if the Qs are coming out of overbought and the VIX is coming out of oversold, and the price on the Qs are right there at 280, then I'll have a pretty high degree of confidence that I have a high probability trade for the short side on the Qs, or puts, trading puts on the Qs for the day. And actually, probably not even for the day. Probably I'm still taking profits relatively quickly on my shorts. I did take shorts here in the past couple of days on the 23rd and the 26th, Friday and Monday. I did take some profits as it approached the 271, this 271.39 level. And it's nice. I mean, I started entering those trades back here when the Qs were at 302, and here it is, $30 lower a couple weeks later. And so it worked out really quite nicely. It was quite a nice move. These are moves. 12.5% is a move you would see in a year. And it's happening in a matter of 2 weeks. Now here we have let's go all the way back to the 16th of August here, and got from the 16th of August to the recent low. Let's go the recent low on Friday. That's an 18.66% move to the downside, and For whatever reason, I don't know why, I chickened out on selling at this resistance level, but it did an outstanding job of getting to that resistance level and just failing. I know a lot of people have this same, let me make it a little bit bigger actually. I know a lot of people have a very similar line. The difference between my line and a lot of other people's lines is I don't mind going from the high back here on, what is that, the 19th of November over to the high close on the 29th of March. That's how it makes sense to me for the top end of things. And the bottom end of things, I'm going from the close on the 4th of October to, where did I put the other one? Yeah, to the close of the 14th of March. So about a 6-month time frame there. And that's my channel. That's how I have my channel set up. I know a lot of other people have a very similar channel, but not quite the same. This one's working for me. This one is doing a pretty good job of behaving with respect to the neckline and the top resistance. So really, this is a head and shoulders pattern here. I love head and shoulders reversal patterns. This is the neckline. The neckline points in the opposite direction of the previous trend. Here's the previous trend over here on the left. Here's the neckline pointing in the opposite direction of the previous trend. And this is a trend that's going to last a while. This is going to be in reversals like this. Aren't short term. Reversals like this, it took this thing, let's say March of 2020 to complete the pattern, and May of 2022, so a little over 2 years for this pattern to complete. So we've got about 2 years of downside happening here. That's it's not going to be in a straight line, of course. But things are, I'll reassess in mid 2023. Things could definitely change by then. For the time being, though, it's the bearish outlook. The outlook is bearish. The bearish outlook. So, and I'm looking for opportunities to get into nice, juicy put trades. So, this leg, I think, in order for this leg to sort of satisfy the Elliott wave theory, I haven't watched the guy that does Elliott wave theory he's a go-to for Elliott wave theory, and I haven't watched him in a couple, 2-3 weeks now for the destination, but I think it's somewhere around 230. The Q's destination on the downside to satisfy the Elliott wave theory is a 230 mark, and that can happen anywhere between now and the next 2 months, really. October, so earnings season kicks off in the middle of October, and it's forecast to be bad. It's forecast that a lot of these companies who've been guiding down already are gonna hit their guidance, or they might even outdo their guidance, but they've downgraded their guidance so drastically that it doesn't even matter if they beat their guidance or miss or whatever. It's still, people are gonna be like, no, look, profits are down, revenues are down, blah blah blah. It's down, 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 down. It's terrible. It's terrible. So yeah, that's the way that it's looking for the moment. I am looking for short-term put positions because really in markets like this is when you get the bulls shaken off, or you get the bears being shaken off by these big runs in volatility and the big drops in volatility. I think, though, here in the next couple of weeks, we're probably going to see a pattern like this on the VIX, where it comes up high and hangs out high for a while. I think that we're going to probably see something like that, especially going into earnings season. So, and it could be even a more sustained elevation in the VIX than just a couple weeks. Could be a lot longer. definitely put in a series of higher lows on the VIX right here. Uh, you're not supposed to chart the VIX, but still, I mean, it's, a pattern is a pattern, and so this thing is it's headed up. I mean, the Fed is tightening monetary policy. Uh, Apparently, there's forecast to be a whole bunch of company failures. All these, what they're calling zombie companies that have been living off of cheap money, really low rates for a really long time. And yeah, it is what it is. So, all right, everybody. Oh, and let's take a look at Bitcoin now. Bitcoin is interesting here. Bitcoin is come back down below this mid 1900 or 19,000 level right here. Has been support and resistance for Bitcoin now on several occasions. Back here in 2017, then again it consolidated under that price level in 2020, and then took off. And now this is distribution big time. This is big time distribution. I do not foresee this pattern changing direction for a considerable amount of time, because once again, we have this Wyckoff distribution, and then it finishes off with the beautiful head and shoulders, and the neckline is pointed obviously in the opposite direction of the previous trend, and this is long term. This is long term. Looking out here to February of 2023, perhaps we'll find some support down here in the was that 13,000? Yeah, low 13,000s. The 10-year here is still rather considerably inverted. Let's look at the monthly. Yeah. And the real crash doesn't really start to happen until I've marked these blue lines off on. This is the monthly chart. I think I went back and marked them off on the daily, so I have it down to the day that this is the day that the market peaked in February of 2020. This is the day that the market peaked in June of 2007, and the crash doesn't start until rates start to normalize each time. And rates can stay inverted for a considerable amount of time. I think it's 12 months over here and 18 months over here in 2007, 12 months in 2001, and then we go back all the way to 87, I think, or 90, into the late 80s and into the 90s. So it was inverted for about a year there. So things can stay this way for a considerable amount of time until we see the real crash, which is a little bit unsettling considering that the market's already headed down. Previously, on let's go back to here we go. So previously, even though the yield curve was inverted, the markets were still going up. The Qs, the SPYs, and everything were still on their way up, even though yields were inverted back here. It wasn't until the rates, the spread on the 10-year, 2-year started to correct that we started getting a real crash in the market. So it's certainly foreboding that we're headed down. We've already gotten over almost 30% now. Let's see. Let me go from top to bottom here. Yeah, we're down 33% on the Qs, and the crash hasn't even started yet. The real crash hasn't even started yet. How this all shapes up, this is totally speculative. We could get a new high before the rates start to normalize and the crash happens again. I mean, things could be that crazy. I doubt it. I think that we're headed lower, and once rates start to normalize again, then we're headed even lower. So, all right, everybody. Good luck out there. Keep your wrist tight. Click like, share, subscribe. Thanks for tuning in. And I will see you at tomorrow morning's strategy session. I am out.